Good morning, traders. It is Monday, January 27th. Market's going to open on a pretty somber note today. You can see the indication here is for about a 50-point drop in the S&P 500, leaving us with a very large gap. You can see that this primary support level at 325, which I've been identifying over the past few days, is actually going to be breached on the open today. So I want to try and get this video out early because I'm not sure how much time I'm going to have in the morning to post another video and to update you on everything that's going on. My first priority is to the chat room, and things are going to be moving very, very quickly. Two things. That's where I posted the video last night to give you lots of great stocks to look for on the upside and on the downside. I also mentioned a few things that I'm going to be looking for this morning in terms of price action. So I'm going to address day traders first this morning, then I'm going to address swing traders. Let's take a step back and look at what news we have over the weekend. We know that the coronavirus is really starting to spread. There are about 2,800 confirmed cases in China. The acceleration rate for this virus is about 50% per day. That's kind of the increase that we're currently seeing. On the first day of the Lunar New Year in China, there was a 41.6% drop on that first day in travel. Air travel specifically, rail travel was about the same, about 25% decline in road travel. So this is definitely going to have an impact on China's economy. They're doing everything that they possibly can to try and get ahead of the coronavirus. Disney in Shanghai has been closed. Starbucks is closing a lot of its outlets. So, by the way, that might be a pretty good short to look at Starbucks. YUMC is also a possible shorting candidate, although it did get hit very hard on Friday. So we're going to see additional selling. And in the email that I sent out Friday and in the blog post that I put up, and I've also got a link in my YouTube video to that blog post, the market is set up for a drop. And the reason that it's set up for a drop is we've got incredible bullish sentiment off the charts. Everybody piling in on this strong, strong market rally. VXX is near a historic low, so option premiums have been very, very cheap. What does that mean? You can see here. And let's go into the 52-week zoom here. You can see down at just tiny levels. I am long VIX. I've been suggesting to you that you should be long VIX, that we were going to see a volatility pop in here. We didn't know what the catalyst would be. Now we know. So what happens is this is also a very, very overcrowded trade. Lots of institutions selling premium, selling premium, selling premium, and that's driving down the VIX. So what implications does that have? Asset managers are complacent. They're not worried about a market correction because we've got trade deals in place. We have a very accommodative Fed. Everything is clicking. All the uncertainty, Brexit has been resolved, and so they saw very, very limited downside market risk. Yes, valuations were getting a little bit stretched, but nothing too alarming because the market would be able to grow into those valuations as long as economic growth was stable and as long as guidance was good. And that is still the case. So on a day trading basis, I'm going to be looking for this initial drop. This seems to be an overextension. I'm going to be looking for on a 5-minute basis. We are near that 325 support level on the SPY. But what I'm going to be looking for is a series of, and this is the chart from Friday. This is a 5-minute chart of the SPY. I'm just taking a little segment here to show you the type of price action that I'm going to be looking for. Obviously, we're going to have a big drop down, and we're going to probe for support immediately. I am not going to be buying until I see a support level formed. I want to see multiple tails under body. The longer, the better, because that shows me that the market has tried to sell off and buyers have come in. The market has tried to sell off and buyers have come in. That's what produces those long tails under body. I want to see the body close in the upper quadrant of that range. And once I see maybe 4 or 5 of them together, I'll know that we're ready for at least a little bit of a bounce and I can buy. Now, in terms of day trading throughout the course of the day, what I'll want to see is a low like that. I'll want to see a higher low. So as the market tries to come back and test that low, buyers are already stepping in at a higher level. They're not even letting it get down there because they're so anxious to get in. Another test, another bounce, another test, another bounce. So long tails under body on a higher low, that would also get me a little bit more bullish in terms of actually being able to consider some weekly out of the money bullish put spreads, because that tells me that buyers are coming in at that level. So I don't know that I would be out there getting short right out of the gate this morning. The only caveat to that is if I see long red candles closing on their low, and I'm going to have to go back quite a way to try and find that kind of price action. I don't know that I'll be able to because the market has been gangbuster to the upside. So we see a long candle like that. There's your gap lower a few days ago. Long red candle closing on its low, followed by another one exactly like this. That's problematic. That tells me that this is going to be a really nasty down day and that any bounce would actually be a short even after a 50-point S&P drop. So I will be watching for that early in the morning, but I've got to tell you, I'm kind of nervous shorting the market on that type of move when we've had such strong upward momentum. I don't see that as a high probability trade, especially not early in the day. Implied volatilities and options are going to be very high. The bid-ask spreads are going to widen out when there's this kind of uncertainty. The market makers make all of their bid-ask spreads wider to account for that. So not really good probability getting short right on the open. Now I am actually long some puts from Friday. I'd mentioned that in my other video. I am long the SPY January 31 330 puts. I took a nice profit of about 65-70% on those on Friday, and I held half of the position over the weekend. And as I mentioned in my notes, I saw that this was only going to accelerate. I didn't see that there would be any type of cure or fix for coronavirus, that if anything, it was going to worsen over the weekend, which it has. So bullish speculators have not been flushed out of this market in a very, very long time, not since back in October even. And so they just kept piling in and piling in. The first legs of a drop like this can be very, very violent because you've got margin calls. Anybody that's been layered out there and fully exposed to bullish put spreads, if that was their strategy, they're going to be in trouble this morning. They're going to be forced to buy back some of those bullish put spreads. As those margin calls are generated, it accelerates the sell-off. So, given that we're going to be down today, we could see some pretty heavy duty downside during this washout. I don't like to see anybody in pain. I certainly don't like a lot of suffering that's come from the coronavirus, but I'm a trader. So all I'm going to do is read the tea leaves and try and take advantage of that price movement. We also did have bombs going off in Iraq this morning at the U.S. Embassy. 3 people were injured, so that's starting to come to a little bit of a boil. But all told, the focus really is not so much on politics here in the U.S. The impeachment that's a non-event. You can take a look at any of the skirmishes in the Middle East. Really a non-event. The market's not too concerned about it. It cares about interest rates, which, by the way, Wednesday is the FOMC meeting, and they may actually address what's happening with the coronavirus. They've been extremely accommodative. If they see any type of economic decline because of it, they're probably going to step into easing mode. I don't expect to see that on the early stages of the coronavirus, but I think they'll probably reference it. So we've got the Fed on Wednesday. Interest rates are super low, so that's a really good thing. Economic activity has been excellent. the whole coronavirus will pass and it's going to set us up with a good trading opportunity. How far we might possibly fall, that 325 level was first support. 320 is much more substantial support, and we could test that this week. So, earnings season really ramping up this week. Juniper and Whirlpool are announcing after the close today. Those were excellent bullish put spreads that I highlighted 2 weeks ago. Strong into earnings. Yes, they were. They expired. Those were nice trades. So on Tuesday, after the close, we've got Apple announcing. We have AMD announcing. Those are two really big earnings announcements. eBay and Starbucks will also report Tuesday. On Wednesday, we've got Boeing. Boeing has had all sorts of issues, so that could be a market mover. Facebook on Wednesday, Microsoft on Wednesday, Tesla on Wednesday. Wednesday's going to be a really big day because we've got all those earnings reports and we got the FOMC statement. Thursday, we've got Amazon. So the big question, even without all of the coronavirus, is can the market stay afloat at a forward PE of 18, which is the upper end of the valuation range, with earnings coming out? Is the guidance going to be good enough? Are the numbers good enough to justify stocks treading water at this level? I think in some cases they're a little overextended price-wise, and we're going to see pullbacks on them, even though the numbers are gangbuster. That's the opportunity that we're looking for. We want to sell those bullish put spreads. So as those numbers come out, hopefully we'll get a little bit more of a market retracement, because in the long run for this year, I see really, really good macro conditions for the market to move higher. So this pullback is going to represent a great entry point for us. We just need to let it come in. We need to see those signs of support. We need to take a deep breath. I'm going to be giving you the play-by-play on this each and every day, so you'll know how to position yourself. You'll know what I'm looking for. And when I see the signs, we're going to jump on it. So we love to see capitulation lows like this. And I had mentioned this little period back in September where we had a stair-step fashion down. And then eventually we get one of these days where we probe deep for support and we find it, and the market reverses the entire day to form one of these bullish candles right here. That's the key. So we need to see the selling, we need to see the climax, we need to see one of these bullish hammers on a swing basis. Then we know it's time to go in. That's when we start selling all of our bullish put spreads on strong stocks, with the expectation that we're going to also have a market tailwind working in our favor. And yes, for sure, I'll be looking to buy some calls as well. I like the market here. So it's a temporary pullback. And, my heart goes out to anyone that's suffering from the coronavirus or will be impacted by it. Hopefully, they're going to find a way to slow the growth of it, find out where it's coming from, how it's spreading, if it's mutating. That's right now what CDC and everyone else is trying to figure out. So we're going to have a little bit of a bumpy ride this morning. Hopefully you've got some VXX on. If you had a number of bullish put spreads on, I encourage you to buy some SPY puts. So hopefully you've taken that advice and have some protection. But I also had mentioned we've only got 25% allocation on our bullish put spreads right now. Very, very little. We've been waiting for a market pullback. We've been waiting for these earnings announcements. So take a deep breath. If you're an investor long term, this won't even be a blip on the radar a couple years from now. So you can certainly breathe easier. But as traders, there's going to be some pain taken, especially for bullish speculators. Good luck this morning. I'll try and get a video out sometime midday. If you haven't subscribed to my research, please sign up. It's only $29 for your first month. I'll be giving the play-by-play today in my chat room. So please do that. Also subscribe to the YouTube channel and turn on your notifications. You never know when I'm going to be posting these videos, so you'll never miss one if you do that. Thank you. Good luck. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.